The Bollinger Band is one of the best trading indicators that you can use as a beginner forex trader. The Bollinger Band can easily help you to determine the trend continuation, trend reversal, market consolidation, the price volatility, and price target. All of these are benefits of the Bollinger Band, and this can be used effectively when combined with proper analysis of price direction. That is to say that you don't trade Bollinger Band in isolation. Just as you are seeing in this scenario, you can see that this upper line is our upper Bollinger Band. So this line you are seeing, this is our upper Bollinger Band, and this line you are seeing here, this is our lower Bollinger Band. While we refer to this middle line you are seeing here as our middle Bollinger Band. So this middle Bollinger Band is a 20 simple moving average, and that is the default setting of every Bollinger Band. Now you will see that in this scenario, when price hits the lower Bollinger Band, they are saying buy, and when price hits the upper Bollinger Band, they are saying you should sell. This is right, and only in the right price scenario this is correct, but in the wrong price scenario this is very wrong, and that is why I said we don't do this in isolation. So the fact that price hit the middle Bollinger Band is not a good signal alone for you to buy the lower Bollinger Band, I beg your pardon. And the fact that price hit the upper Bollinger Band is not a valid reason alone for you to begin to sell. You need other confluences. One, such as what is the trend of the market. You must know the structure. It is the structure that tells you if you are to buy or you are to sell, which means that when the structure is bullish, which is an uptrend, you buy. If the structure is bearish, which is a downtrend, you sell. Secondly, if these signals must be effective, it has to be in the right zone. What is the right zone? Your right zone can now be your support and resistance zone. The support and resistance that is in line with the trend of the market. It can be around your trend line zone, the trend line that is in line with the direction of the market. It can as well be as your order block zone, the fair value gap zone. All of this must be in compliance with the direction of the market, not just in isolation. And then after that, that is when these signals will now become valid as your additional entry confirmation. Having said that, I will show you exactly how this is applicable on a live trading chart scenario. So let's go to our chart. Now this is a typical live chart, and I will explain to you briefly. First, we begin with the determination of the trend of the market, and in this scenario you realize that price is giving us a lower high, lower low, lower high, lower low, lower high, and a lower low. So we are obviously in a downtrend, and if you are to use your trend line, you will be having something of this nature. So you can see this if you are using your trend line. So this is a typical downtrend, and this is what you will be having. So once we have determined this, Remember, this movement begins from here, lower high, lower low. So now price has pulled to our trend line zone, right? That is our first touch. This is our point A. If you are following on trend line on this channel, this is our point B, and this is point C, where we are to make our entry. So we will now look at how we can make this entry on point C using the Bollinger Band. So let's go to our 15-minute time frame and see exactly what happened in that shaded portion where I just marked beautifully well. So you can see now this is our 15-minute time frame, and if you consider the point I have marked from the 15-minute time frame, you realize that that is our zone of the trend line. So you can see the trend line lying here. Now look at where price is. Price is at the upper Bollinger Band. Now in this upper Bollinger Band, remember we've talked about our two types of candlestick before now, and those candlesticks we talked about, we actually talked about what? We talked about the bullish candlestick, and as well as either a bearish engulfing, bearish pin bar, or bullish pin bar, bullish engulfing. Now on this time frame, you can see this is exactly what we are having. This is our valid reversal. So you can see that in this direction of the trend line, we now have a bearish pin bar. Do you see that bearish pin bar there? This is our bearish pin bar, and this rejection is now coming from where? From the upper Bollinger Band. So you can now see this is what will make the signal, what I just showed you earlier, so you can sell from here. It is only in this type of scenario that this sell will work. Remember, price is in a downtrend, and because price is now in our zone, point of interest around the trend line, you can see that price sells truly. Do you see that? So that is for the upper Bollinger Band entry. If you do the opposite of what happens here, in a downtrend you are going to buy, in an uptrend you are going to buy, but because this is a downtrend, this is a sell signal. So let's go back to our higher time frame where we were earlier and see what happened. Now in this scenario, look at this. Price obviously makes some movement, and I will want you to see this out tonight. Now you can see what happened here. What price did? Price gave us what? A lower high and a lower low. So price break out of this zone, and then price pushed to the upside. Obviously now we are having a break of structure. So because we had this break of structure, we now have an order block. So this is our order block. This last bearish candle here becomes our order block. So when you have an order block, price already broke out, and then we have this OB, which is our order block, which also double as our area of support zone. We now want price to do up, price to go up, and price should pull back into this order block in order for us to do what? In order for us to buy. Now we will now move to our 15-minute time frame. Price has returned inside it. So let's go to 15-minute time frame, or let's check our 1 hour first and see what happened. Beautifully well, you can see now on this 1 hour, this is the order block, and look at what happened. Because price is now in an uptrend, we will now need a bullish confirmation for us to buy. So we have these bullish candles here in order for us to make our buy entry. Why is this valid? This plays out because we took this entry in line with the direction of the trend. This entry was not taken in isolation. So you see now, it was in an order block, it was a break of structure, and it was an uptrend. So this pin bar here and this engulfing candle becomes our valid entry zone. So this is how best you can apply this. I'll be stopping here for now, and in the subsequent video I'm going to explain in detail how you can use the middle Bollinger Band as an additional tool for your confirmation. Thank you for watching, and please do not forget to like, share, subscribe, turn on your notification so you'll be the first to get notified when we upload our next video. And if you have a question, please drop your questions in the comment section and I'll be there to answer you. Thank you for watching, and see you in our next video.